Hi, this is Ron Rowland from Money and Markets TV. We're in the middle of the first quarter earnings seasons. It seems like the perfect time to tell you about exchange-traded funds that can help grow your earnings. When companies release their quarterly results, their shares often move way up or way down based on their earnings per share, or EPS. It's important for ETF investors to pay attention to this number too, because most funds are composed of stocks, and your earnings depend on their earnings. That being the case, you probably want to stick to ETFs whose stocks are, on average, delivering decent earnings relative to their share prices. Traditionally, stock portfolios are weighted by a company's size or capitalization. But a few years ago, WisdomTree began offering ETFs with a unique fundamental-based strategy based on the size of each company's earnings stream. This makes sense because earnings ultimately give any stock its value. Investors tend to be hopeful about their stocks, however, so it's common to see popular names grow far bigger than their earnings stream can justify. Suppose, for instance, you have two companies. Both had net income of $10 billion last year. Both have the same number of shares outstanding, but one company trades at $25 while the other is at $75. In a cap-weighted ETF, the portfolio will have 3 times as much allocated to the more expensive stock, even though it isn't generating any additional profits. Under an earnings-weighted approach, both stocks would have the same allocation because both are equally profitable. WisdomTree implements this methodology in 6 domestic stock ETFs, and it seems to be working well. The WisdomTree Earnings 500, for example, holds the same 500 stocks as the Spider S&P 500, and over the past 12 months, EPS has outperformed SPY by about 2%. Other sponsors also include earnings as part of their ETF weighting schemes. Over at Russell Investments, they use earnings as one of the stock selection criteria in their investment discipline ETFs, such as Russell Growth at a Reasonable Price, symbol GRPC. If you're looking for more earnings growth in your investments, then take a closer look at these ETFs. One word of caution though, many investors have not yet discovered these gems, so their liquidity can be quite low. Be sure to use a limit order if you decide to venture in, and monitor your investment closely. I'm Ron Rowland from Money and Markets TV. Thanks for watching.